Do you have an existing loan with CashnetUSA and find yourself wondering, can I still apply for another one? It's a question that many borrowers face, a common crossroad where immediate financial needs collide with the realities of credit and lending policies. You're not alone in asking this. Perhaps an unexpected car repair just landed in your lap, or a medical bill arrived that you weren't anticipating. Maybe it's a sudden opportunity you can't afford to miss, but it requires a bit of extra cash. Life, as we all know, has a knack for throwing curveballs, and often, those curveballs come with a price tag. You might be thinking, I've been a responsible borrower with CashnetUSA. I've made my payments on time, or I'm diligently working on paying off my current loan. Surely, that counts for something, right? Or perhaps, on the flip side, you're a bit concerned. Will having an active loan immediately disqualify me? Am I seen as too risky if I'm already obligated to them? These are valid concerns, and understanding the nuances of how lenders like CashnetUSA operate when it comes to multiple loans is crucial for making informed financial decisions. It's not as simple as a yes or no answer, and there are several factors at play that determine your eligibility. Before we dive deep into the specifics of CashnetUSA's policies, let's set the stage a little. The landscape of online lending, especially for short-term loans, is designed to provide quick access to funds when traditional banks might not be an option. These loans are often used to bridge financial gaps between paychecks or to cover unforeseen emergencies. They offer convenience and speed, but with that convenience comes a responsibility to understand the terms and conditions, and critically, your own capacity to repay. Now, imagine you're in that situation. Your current CashnetUSA loan is active, and another financial need has arisen. What's the first thing that comes to mind? For many, it's a quick mental scan of their existing financial commitments. You might be thinking about your budget, your income, and how another payment would fit into that equation. This initial assessment, even if subconscious, is actually a good starting point because it mirrors some of the factors that lenders themselves consider. So, let's get right to it. Can you apply for another loan with CashnetUSA if you have an existing one? The straightforward answer is, potentially, yes, but it's not guaranteed, and it depends on several key factors. It's not an automatic denial simply because you have an active loan. However, it's also not an automatic approval. CashnetUSA, like any responsible lender, has internal policies and a robust underwriting process designed to assess risk and ensure that borrowers aren't taking on more debt than they can reasonably manage. They want to set you up for success, not for financial strain. What are these key factors we're talking about? Let's break them down. First and foremost is your repayment history with CashnetUSA. This is perhaps the most significant determinant. If you've consistently made your payments on time for your existing loan, or if you've even paid it off early, you've built a positive relationship with them. You've demonstrated financial responsibility and reliability. This significantly increases your chances of being approved for a second loan. Think of it like building trust. Every on-time payment is a deposit into your trust account with the lender. Conversely, if you've missed payments, had late payments, or defaulted on a previous loan, your chances of approval will be significantly diminished, if not entirely eliminated. Lenders view a history of missed payments as a red flag, indicating potential difficulty in repaying additional debt. Second, CashnetUSA will assess your current income and ability to repay. This is critical. Even if you have a stellar repayment history, they need to ensure that your current income can comfortably support an additional loan payment. They'll look at your net income, what you actually take home after taxes and deductions, and compare it to your existing financial obligations, including your current CashnetUSA loan and any other debts you might have, credit cards, mortgages, car loans, etc. They use various metrics, such as a debt-to-income ratio, to determine if adding another loan payment would push you into a high-risk category. They want to see that you have enough disposable income to comfortably cover all your monthly expenses, plus the new loan payment. This isn't about being punitive, it's about responsible lending. Overlending can lead to defaults, which are bad for both the borrower and the lender. Third, The state you reside in plays a surprisingly important role. Lending regulations vary significantly from state to state. Some states have stricter laws regarding the maximum loan amount, the number of outstanding loans a borrower can have, or the cooling-off periods between loans. It's possible that your state's regulations might prevent you from taking out a second loan, even if CashnetUSA's internal policies might otherwise allow it. Always be aware of the specific lending laws in your jurisdiction. These laws are often in place to protect consumers from predatory lending practices and to ensure fair and responsible borrowing. Fourth, the type of loan you currently have and the type of loan you're applying for can matter. CashnetUSA offers different types of loans, including payday loans, installment loans, and lines of credit, depending on your state. The terms and conditions for each can vary. For instance, if you have a small payday loan and are applying for a slightly larger installment loan, the assessment might be different than if you're trying to take out another payday loan immediately after receiving one. The total principal amount of outstanding debt with CashnetUSA will also be a factor. They have limits on how much they are willing to lend to a single individual at any given time. Fifth, your credit score and overall creditworthiness will still be considered, even if CashnetUSA is known for being more accessible than traditional lenders. While they may not rely solely on traditional credit scores in the same way a bank might, they do use alternative credit data and internal scoring models to assess risk. A significantly deteriorated credit score since your last loan or new negative marks on your credit report could impact your eligibility. If your application is approved, carefully review the terms and conditions of the new loan. Pay close attention to the interest rate, fees, repayment schedule, and total cost of borrowing. Ensure you understand how this new loan will interact with your existing one, particularly if the repayment dates or amounts are different. In summary, having an existing loan with CashnetUSA does not automatically disqualify you from applying for another one. Your eligibility hinges on a combination of factors: your impeccable repayment history with them, your current income, and proven ability to comfortably manage additional debt, the specific lending regulations in your state, the type and amount of loans involved, and your overall creditworthiness. It's a comprehensive assessment designed to protect both you and the lender. Always approach borrowing responsibly, ensure you can comfortably repay any new loan, and prioritize understanding the terms and conditions before committing. With that said, thanks for watching, and until next time.